one day on a Friday. You can set that up where a bank will automatically take $25 out of your checking account and put it in a savings account. Okay. At first, $25 might seem like a lot, but over time, you will begin to not even miss that money. And as it continues to go into the savings account, in 3 to 5 years, you'll have a lot of money in there. Basically, we just want to encourage people to think long term instead of, I have a teenager, 16-year-old. He's just thinking about today and not tomorrow, and he wants to know, what do I get today? We're trying to teach him. You need to think about your long-term goals, not just for today. So just click on through. We're going to kind of, I think we'll skip the thing on that. Let me just go through a couple things out of the guide that you have on page 8. When you think about your long-term goals, you need to be very clear about those, what you want to do. Many of you even here are students, and I know some of you aren't, but we want to encourage you to write your goals down, the things you want to do after college, or if you're out of college, the things you want to save money for now, and be very clear about that. Page 8 offers some great savings tips. I know we all get kind of caught up in the day-to-day. We like to go out to eat. We like to buy coffee. We like to have life's luxuries. And certainly we all think we deserve it. But I would encourage you to think a little bit about some of those things that you do every day that you really don't need. For my wife, she likes to go to Starbucks, and I don't. So I always encourage her to, we don't need to have Starbucks 5 days a week, and what else can you do with that money? Or you like to go out to eat every day. So when you're thinking about making your financial goals, and how do you meet that, sometimes it's just about self-discipline and being able to say no to yourself and say, hey, if I don't do this, and I say that money, what can that get me in 2 years? What can that get me in 3 years? So page 8 has some great tips on it. I would encourage each one of you. We're with Eagle Bank. I'm at the branch over on North Hills, as Kimberly is. I would encourage each of you, if you don't have a bank account, or if you don't have a savings account, come by and see us. As I talked about earlier, you have some great ways to set up automatic transfers from a checking account to a savings account. So when you do get paid, we can help give you the opportunity to put some of that money in the savings account. Go back through there.
Basically, as a bank, we offer certain products, as you know, checking accounts, things like that. But we offer, other ways to help you save. That can be as simple as a bank savings account or a money market account where you can put a little bit of money into and help that grow over time. And we also, as a bank, we offer investment accounts for typically later on in life when you've met the kind of the minimum savings. I need this, so I'm going to put some money in a savings account. Investments are typically for longer-term goals like retirement, saving for a house, those type of things. I wanted to go back and just talk about the various types of savings accounts. Sorry, our presentation is a little busy. But we'll just kind of talk about it. There's 3 types of accounts that a bank can offer to help your money grow. We have our basic savings account. Those are typically, you can open them with a $25, $100. You put that in there. We're going to pay you interest. Interest is basically your fee for having your money with us, because a bank typically takes the money that it has on deposit and we loan it out to other customers. So for your cost of having the money with us, we'll pay you interest. The savings account, again, has typically the lowest entry fee, I would say, and we pay you probably the lowest rate of interest on it. It does allow you to take your money in and out as you need it. There are some minimum withdrawal requirements or maximum withdrawal requirements. And then you have things like certificates of deposit, where you can put your money in for a certain amount of time. We do pay you a higher interest rate, but the money has to stay in for whatever term you set it up for. So if you take out a 1-year CD, we'll pay you a better rate of interest than on a savings account, but we'll require that you leave it in there for 1 year. And then you have things like money market accounts where you're in a higher rate of interest, but it does require a higher minimum balance to start. You can take your money in and out of it as you need to. There are some withdrawal, maximum withdrawal requirements, but it does allow you to get to your money if you need to. Going through that. For those of you who will have kids in the future, which I assume most of you will, especially if you're a college student now, whether you had financial aid when you got here or your parents or somebody may have helped you with college, a 529 college plan is a great way for you to help you study for your kids' college. It allows you the opportunity to deposit money into an account, typically an investment account. It will grow, and by the time, hopefully, that your kids get to college, you'll have the opportunity to help them pay for, all of it or some percentage of it. So, 529 plans are typically offered through an investment advisor, and those are things that Eagle Bank can help you with. So, I encourage each one of you, after the presentation, we'll allow you to come up and get a water bottle and some pens and some information on the bank and our business cards. I'll throw this out there. Love the opportunity to talk with any one of you, even if it's just questions, even if you just want to know something about banking, lending, anything like that. We're always here to help people in our community. And Shorter College, I know, serves a great purpose here in North Little Rock. And I've got to know the college over the last 2 years that I've been with Eagle Bank and have met many people. And everybody has just been so nice. And I think they just do a wonderful job. And I've met a lot of the students here on various things, and I couldn't have better things to say about them. So we would love the opportunity to visit with you in the future. Even if it's just a question about, hey, this is what I want to do. Give me some advice on how to get there. So with that, I'll kind of open it up for any questions that any of you may have. Yes.
On that CD account,
Yes.
can you set up in like 3 month terms like that?
You can set it up as little as 1 month, all the way to 5 years. Is that right, Kim?
Yes.
Yeah. So we have 1 month, 2 month, 3 month, 12 month, 18 month. Do we have an 18 month?
I don't put an 18 right now.
Okay.
That's
Well, yes, absolutely. You can set it up for as little as 3 months. Yep. Have another question?
I'm not understanding what the CD is. Can you
Okay.
kind of
Sure, absolutely. A CD is what we call a certificate of deposit. It's a bank deposit, similar to a savings account. Let's just give you an example. You bring us $1,000, and we're going to open you up a CD. Let's say it's a 3 month, just like this gentleman asked about. So we're going to keep your money for 3 months. We're going to pay you a pre-stated rate of interest, and I'm not 100% sure what the rate on the three month CD is right now. Okay. Let's just say it's, for explanation purposes, it's 0.5%. So we're going to pay you 0.5% for that 3 months, which is much higher than what a savings account would yield. And then after that 3 months, you're able to take that money out and either reinvest it in another CD or use it for whatever purpose that you may want. But if you take it out before the 3 month period, you get a penalty, which means, we're going to take we're going to take all your interest and a little bit of that principal. So a CD is really good for people who have long-term savings goals. Let's say you have $5,000, and in 2 years you're going to buy a house, and that's going to be the money for your down payment on the house. You put it in a 2-year CD, and the most important thing I think of for my benefit is it keeps me from getting that money. Because I'm like everybody else, you have long-term goals, but then things pop up along the way, and you go, wow, that $5,000 sure looks good. Let's use it to go on vacation or whatever. So it's really a great product if you want to earn a higher rate of interest, but you also want to keep your money where you can't get to it. Because most people will not pay the penalty to pull it out. So it's a great vehicle for savings. Yeah. Does that help? Yes, sir.
On the CDs, does the amount of, the CD that you get and the time that you get it for, is that making the interest rate fluctuate?
Well, I don't think, do we have a minimum or a maximum on that, Kimberly?
On the CD?
Yeah,
No,
Yeah.
the longer the term, the better the rate will be.
right.
Not the amount of the CDs.
Yeah, the longer the term, okay, I see what you're saying. Yeah, typically, let's just say a 3-month CD and a 1-year CD. We're gonna pay you a little bit better interest to keep it in there for a year than we would pay you to keep it in there 3 months. So the rate is gonna be better for the longer terms. So we wanna encourage you to keep your money in there as long as you can. Remember, what a bank basically does is we take deposits from people, checking accounts, savings accounts, CDs, and we use that as money to lend out to individuals, businesses, and that's how a bank makes money. So the longer we can keep money on deposit with us, the better opportunity we have to lend it back out to people who need a loan. You know, some people don't need loans; they need deposit accounts. Some people don't need deposit accounts; they need loans. So we encourage, and all banks do, we encourage those long-term deposits. That helps us kind of with our loan funding. So, yeah. Yes.
What are your qualifications for a loan?
Well, you know, we look at your credit history, of course, which every bank does, and then we look at what we call your ability to repay, which means we take all of the debts you have on your credit report, and we look at the proposed loan that you would be looking at. Let's say you're buying a car. So we're going to pull your credit report and look at all the loans you currently have and what the payments on those are, and then we're going to take the loan payment for, let's say, our car, and we're going to use your monthly income to determine, do you make enough to pay us back on that? Of course, if you have good credit, you have good job stability, you have the ability to repay, and we will typically can help people with the loan. So, yes.
Do you offer 2 or 3 K loans? What is a 2 or 3 K loan that you offer?
203K loan?
Yes.
We don't typically offer that through the bank. I don't know, is that a type of loan for a business, or is that?
Like a mortgage rehab.
Okay, we have a mortgage department. I wish one of our mortgage lenders could have been here with us today. I asked a couple of them, but they couldn't make it. But yes, we have a mortgage division. They offer many products through there, and I'm not a mortgage loan officer. I typically do the business loans and personal loans. So I'd encourage you to take one of my business cards, give me a call, and I will pass your name on to one of the mortgage lenders, and they will definitely give you a call back. Yes.
My question is, which type of account would accumulate the most interest rate?
Well, what we call a money market savings account. A money market account is typically for higher balances. Let's say you had $10,000. I don't have $10,000, but let's say you did. You'd want to put that in what's called a money market account because, again, as a bank, we're trying to gather deposits from people in our community so we can loan that money out. So the more money we can gather, we're going to pay you a little bit higher interest rate. So a money market account is going to have a higher rate than typically just a regular savings account. Yes, I'm sorry. Yeah.
On that money marketing,
Uh-huh.
like say for instance you have it set up like every 3 months, and
Sure.
you put an interest every 3 months.
Sure.
If you leave your 10,000 there, doesn't it build your credit at the same time?
Well, as far as your credit, is that what you're saying?
Yeah.
Yeah. The deposits typically don't factor into your credit history.
I'm saying by you leaving the money in there and just taking out the interest.
Well, now what it does is it helps you earn compound interest. Now, compound interest is basically when we pay you interest. Let's say you have $1,000. Okay. In month number 1, let's say we paid you 50 cents on that $1,000. The next month, we're going to pay you that percentage rate on the 1,050 cents. So your interest does increase due to compound interest. Is that what you're asking?
No.
Okay.
I'll talk to you later.
Okay, that's fine. Yeah, talk to me after the meeting, and we'll definitely see if we can help you. Yes, ma'am. Sure.
You have, what you call secure loans, you don't have bad credit.
We
You're trying
do.
to establish
We
credit.
do secure loans. Now, we do them by what we were talking about earlier, the certificate of deposits. We'll ask you to put money in a certificate of deposit for whatever term, 1 year. it's your money, but then we'll turn around and loan you basically your money back. And what that does is does help you build credit, because we do report that on your credit bureau. So we have a lot of people do that, just to help them establish credit, or if they've had credit issues in the past and they're just trying to get back on their feet. So I encourage you, if you're thinking about something like that, yeah, give me a call. We can definitely. Oh, you do have it already? Yeah, no, it's a great product, and it's definitely something that'll help you rebuild your credit over time. Good.
And one more question.
Sure.
Now, could it be a situation where you will be denied that loan even though you have a CD?
No, if you're doing a CD secured loan, we don't deny people that. I mean, you're basically borrowing your own money. Okay. Now we take the CD as collateral, which means if in the event that you didn't pay the loan, we cash in the CD and pay the loan off. So no, I do them quite a bit. They're automatic guaranteed approval on that. So yeah, no, and they are great ways to build credit if you don't have it, or if you've had credit issues in the past. It's a great way to kind of rebuild credit. So yeah, no, we do them a lot. Yes. No, go ahead.
If you have done that and you pay the loan back, what would be the next step into trying to obtain a home if you want the loan?
Well, talk to one of our mortgage lending people. Again, Eagle Bank has a pretty big mortgage lending department. I don't do those types of loans, but I am in an office where I do have a couple of people that I encourage you to talk to them. You can get one of my cards after this. Give me a call, and I will pass your number on to one of the two girls there, and they will tell you how, based on your situation, how to go about applying for a home loan, or some ideas to help you if you're maybe just not quite there yet. They can give you some ideas on kind of how to get there. Loans for homes are based on your credit history, your ability to repay, like we talked about earlier. So, they're going to look at those kind of things when they look at doing an application for you.
I was just kind of trying to understand what my next step would need to be, because I did take out a loan, a secured loan.
Sure.
But it was still on the management.
Well, that's okay, and it still shows up on your credit history. So it's not necessarily. It's really hard to tell. We talk to people all the time, and as a lender, I always talk to people, and they'll tell me, well, this is my situation. But until I kind of dig down deeper and see the credit report, it's hard for me to kind of make an educated decision on, is this something we need to move forward with? Or I think to visit with people and kind of get, their thoughts on, hey, this is what you would need to qualify. You can certainly always put in an application, and we're happy to, do that with you. And we can pull your credit history, look at it, and at that point, maybe we move forward with an application, or maybe we come back to you and say, these are some things I think you should do in order to kind of get to that next step. Yes.
That's all right. Thank you.
Oh, no problem. Yes.
As far as rebuilding credit, which one would help more, getting a loan from the bank or getting a credit card?
Well, either or. A CD secured loan, like we were talking about, is easier to get than a credit card. Okay, so I don't know of a lot of credit card companies that if you're rebuilding credit, I don't know of a lot of credit card companies that will.
Yeah, that's in the month.
Oh, do they? Okay. Well, I tell you this, when I look at somebody's credit report, in our credit decisions, we don't distinguish between a bank loan and a credit card loan. We're looking to see, on a credit report, we're looking to see, do you consistently make payments? Okay. If you've taken out a credit card loan or a bank loan, have you paid that back? Are you making the minimum monthly payments, and are you paying on time or late? Those are the things we're looking at. So we're not necessarily looking at the difference between a credit card.
No, not you guys, I'm talking about as far as building your credit.
Oh yeah, well no, either one of them will help your credit. Am I up? That's not. She's giving me the eye over there. Well, again, I just want to thank you guys for inviting us out. Again, I've been here several times. I've always had such a great experience. And, you guys should be really proud of the please stop by when you leave, grab a water bottle. We have plenty under there for